So our next speaker from Montreux Funds is Clive Harris, who came to be with us today, and he's going to talk about investing in long-term care. As you all know, we're all getting older and we're living longer, so and that doesn't necessarily mean that the quality of our life is getting better. So we're seeing globally the percentage of people who need long-term care growing. So it could be very interesting to hear what Clive has to say.
Okay, well, thanks very much for letting me present to you this evening. My name's Oliver Harris, Montreux Capital Management. Just to start with, I'm hopefully going to put a compelling case to you as to why you should look to invest in healthcare. The UK market alone, this is senior living, is estimated to be just under 26 billion by 2015, and that's growing at an annual rate of 3.9% per annum. So it's one of the few real growth sectors within the economy. Now, having said that, certain specialist types of care, acute and psychiatric, are set to rise in value terms by 24 and 42% respectively. But what we're seeing is a huge amount of outsourcing from the public sector, where the government's cutting its NHS budget, it's contracting those specialist types of care to private operators. Ageing is a global trend. It's not just the UK, it's all the major world economies. The number of people aged 85 and over in 2011 in the UK alone was 1.5 million. That's the sort of key age bracket within senior living, 85 plus. Now that's set to rise by over 70% during the next 15 years due to the fact that we're all living longer and medical advances. To add to this increase in supply, there's also a fall in supply of care homes. What you've got currently in the UK market in particular is a lot of poor quality non-compliant stock. So those homes don't comply with the current regulations, they're not what we call future-proof, and ultimately they're going to have to close. Today, UK taxpayers spend 0.5% of GDP on care for the elderly in England, and in Age UK's view this needs to increase to 0.9% of GDP by 2020. Okay, so although we're all living significantly longer due to medical advances, we're not necessarily living longer and healthier, mainly due to conditions such as strokes and dementia. Also, current trends in obesity and alcohol abuse are likely to increase the need for long-term care. Now currently, men and women who retire at 65 can expect to spend approximately 56 and 57% respectively of their retirement in good health, which means that the average person will spend 40% of their retirement needing some form of long-term care. Now in 2011 there were 466,000 places in UK care homes for the elderly and physically disabled. That excludes the NHS supply, so that's just the private sector. Now at the same rate, it was just under 5 million people aged 75 and above, so that's an actual rate of supply of 10.7. Now based on ageing in place and the demographic trends, there's a need for a net increase in capacity of 244,000 additional beds by 2027. That doesn't take into account the non-compliant stock, which will also need to be replaced. So that ultimately means that there's going to be a huge demand for healthcare facilities over the next 20 years. Some statistics which I personally found staggering, but the average cost of keeping someone in hospital during the last year of their life is £222 per day. Now the NHS is already overstretched, with 1 in 4 NHS beds currently being taken up by dementia patients. There's a huge amount of bed blocking. Now that might be where someone that's elderly has gone into a hospital for a routine operation, such as a hip replacement, but they ultimately end up staying a lot longer because the hospital has a duty of care. They can't release that person back to their home. So ultimately, care facilities are a more cost-effective alternative to the government. The cost of dementia to UK societies is estimated at 23 billion, and over the next 10 years the number of people is expected to rise to 1 million with the disease. David Cameron has recently announced he's pledged an additional 1 billion to care for dementia patients, and he wants to make the UK a world leader in dementia care. So what's unique about our fund? First and foremost, we're not a property fund. We buy established care businesses and we operate those businesses. So we buy, although the fund's only been going just over 12 months, the businesses that we own and operate have been in existence for a long period of time. Our latest purchase, Featherton House, has actually been in operation for over 22 years. So we own both the freehold property, but we also operate the business. Now that means we can add value in multiple ways, and ultimately we're not at the mercy of landlords, which is where a lot of the big corporate care operators have fallen down because they've entered into unsustainable rental obligations. There's a long-term supply-demand imbalance. This fund is simple and easy to understand. There's not a complicated strategy here. There's a huge need for the services that we're offering. The businesses that we own are highly predictable and very, very profitable. The key driver in healthcare is occupancy. So if you've got 24, 30 rooms, average fee of £850 to £900 per week, you can accurately predict what your fixed and variable costs will be. As we've shown over the last 12 months, we can perform in all market conditions. And unlike most alternative funds, our fund is income producing. So it's not to say that alternatives that are non-income producing aren't good, but most alternatives involve buying an asset and hoping that asset appreciates in value, whether that be wine, life settlements, whatever. Our businesses, the average net profit margin throughout the group is 30 to 40%, so they're very cash generative. Our investment objective is to provide a stable, steady income for our investors, approximately 10 to 12% net of all fees. We've recruited a very, very senior healthcare team who have done it before experience. Our primary focus initially has been on the UK market, but within the operating memorandum we can invest in healthcare in any European country. And we like to acquire healthcare businesses that have got a demonstrable track record of sustained high profits. They're regulatory compliant and future-proof. Where possible, we like them to have growth potential. And currently in the UK market in particular, we can optimise what we call moment-in-time sell drivers. A lot of the large corporates are deleveraging their businesses. The biggest operator is currently trying to refinance a 30-year interest rate swap at 6%, which is going to cost them about £500 million. Also, many people that were going to sell their business maybe 2007, 2008 have held on to see if the economy improves. So due to the lack of leverage within the economy, we can negotiate harder and buy businesses at a very favourable price. We restrict our leverage within the fund to not more than 40% of loan to value, and we've got a very, very strong liquidity strategy. So why care businesses? I've already touched on this, but we're largely uncorrelated from equities, bonds and the wider property market. Our valuations, it's a monthly valuation fund. It's not dependent on the bricks and mortar value. It's a healthcare businesses are valued on a profits method of valuation. It's a multiple of EBITDA. The revenue streams are highly predictable, based on occupancy, average fee rate and recognised cost profile. When a resident comes into one of our homes, they sign a minimum of a 12-month contract. So our resident turnover is very, very low. And the average stay within an elderly care facility is 3 years. So, as I said, the key driver is maintaining occupancy. And there's an undersupply in most key areas of care: elderly dementia, EMI, learning disabilities, and also specialist care. Just a case study of one of the businesses that we currently own. It's a 24-bed boutique residential home in Western Place in Kent. EBITDA of that business is 425k, part financed through RBS. One of the key things we look at when we do our due diligence, and the process generally takes about 6 months, is the relevant demographic of the local area in comparison to the UK average. So as you can see in all the major age brackets, Western as an area outperforms the wider UK market, which means there should be a good supply of potential clients to our home. Just a small P&L of the business. Turnover of that business alone was 918,000. Wages is the biggest cost in any care facility, 375, which is in line with market expectations. Expenses, that's food, utilities, entertainment, etc., just under 120k with a net profit margin of 425. Now this particular business, where I said about adding value, we're currently going through the process of adding an 8-bedroom extension onto the business, which will increase EBITDA by about 160,000, which is a significant return on capital for the investor. Group turnover by the end of Q4 will be just under 12 million, with a net operating profit of around about 4.2. We currently have bank funding sanctioned with both Barclays and NatWest, and that's on extremely favourable terms. So just in summary, there's a favourable long-term demographic trend, there's a large supply-demand imbalance, a growing private sector, high occupancy and strong yields, very, very high barriers to entry. Not just anybody can open up a care facility. You have to have a significant amount of experience, and in the UK we're regulated by the Care Quality Commission. Valuations based on EBITDA, low resident turnover and significant business development opportunities. Acquisition update. As I said, acquisitions take a while, so we're actively looking. Due to complete November, Patcham Nursing Home is a 30-bed dementia unit in Patcham, West Sussex. And Project Blossom, it's a regional group of 5 40-bed dementia homes based in the southwest of England, which produces, that group alone makes just under £2 million a year net operating profit. And we're also looking at a number of potential sites for 55 plus retirement living apartments. That's the Project Blossom, just the turnover from the 2011 audited accounts. The turnover just over 6, wages 3.2, expenses 1, with a net operating profit of just over 1.9 million. Our fund is a Luxembourg CCAV SIF. So we're regulated by the CSSF. Property advisor, Jones Lang LaSalle, the second largest healthcare valuer in the UK. KMG Capital Markets, we've got an independent board of directors who verify all investment decisions. Fund accountants are EFA, auditor and tax advisors are Deloitte, third party custodian KBL. UK lawyers, Underwood & Co, UK auditors WSM, and our legal advisors in Luxembourg at Elving and Houston Cruising. Just a bit on our performance, 3 month 1.55, since launch 11.17. We've just launched a distribution share class which launched last week, which pays 7.5% income annually, and our annual management charge is 1.5%. Just as has already been alluded to, we're fund managers, we don't take direct business. Michael is based here in Israel, and he has the exclusive distribution of the Montreux fund. So any questions, any follow-ups, please direct those to Michael directly. But we're more than happy to take questions via Michael. Any questions?
How many assets do you have?
We currently own five homes. Yeah, 5. By the end of the year, we'll own 7.
What sort of size are you aiming for?
Initial fund size, certainly by our initial target is 100 million.
You're standing at the moment at
Just under 20.
right.
Yeah. So.
And you have the ability to invest that size.
Yeah, I mean,
to multiply your company by 5 times if somebody just came along with 100 million.
if someone just came along with 100 million in one go.
I'm saying the 80 million that you're looking for.
Yes, we could easily allocate that. We look at everything from single owner operators, 2 or 3 million, up to regional groups which are 15 to 20 million. So there's a wide range of assets to purchase. I mean, there's a care village that's being built at the moment, which is 55 million plus. So, and we have got very good contacts within the industry. So we could easily allocate capital.
Okay, well, thank you very much, everyone, for coming this evening. I hope you enjoyed the evening and that you got information of value. And we'd be happy to help in any way. I'm here in Israel all the time if anyone wants to consult with me, and Alex is in London, and we work along with with financial planners, so we can also organize financial planners to help. The concept of the financial planning, of course, is putting the client's interest before your own. So we're dedicated to our clients, and we work for them in order to help them achieve their life goals. We're compensated from clients mostly, and if a financial planner is compensated from the product, he will of course declare that to the client. So happy to be with all of you, happy to answer any questions, and I know it's already late in the evening, so some of you are in a hurry to get home and start their weekends. So thank you for investing your time with us, your valuable time, and have a great weekend.